Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Guys, this stock dropped 6% on Thursday after its earnings release. The numbers were great. They even announced a huge dividend increase, their largest dividend increase, Lanny, in 10 plus years. But the stock dropped. The stock tumbled. So we're asking ourselves, is this the perfect time to buy this stock?
Smash that subscribe button. Give us a nice thumbs up. This stock down 6.5% in one day, but it's somehow up 146% in 5 years. What a beast of a stock. One of the largest companies in the world. 751 billion in market cap, top in the charts here in the United States.
Ooh.
Damn, Bert. Damn.
Oh, dang. Have you figured out who we're talking about yet, Lanny?
We are talking about Walgreens. No, not Walgreens.
Are we talking with a W? Are we talking Walmart, ticker symbol WMT? Man, oh man, yeah. Walmart, everybody. Our household, I just got the notification, Lanny. Our Walmart Plus delivery for groceries is going to be coming here right now. It is one of my favorite subscriptions. I'm not going to lie. Walmart has put together an amazing.
You're like, I'm never going to give you up.
Never going to lay you down. But in all seriousness, that's part of what's been the charm. Walmart. Yeah, it's part of what's made Walmart so special and why they're up 150%. Before we get into the earnings, what's drawing people to Walmart, they are attracting with their lower cost groceries, their ability to have a cheap Walmart Plus, gives you deliveries, gives you a ton of value. They've started attracting those high earning households. That's what they continue to highlight. We're bringing in those 100,000 plus income households and really drawing the revenue, the subscription in, and expanding their base in a way that nobody would have thought about 10 plus years ago for Walmart.
Yeah, and I'm sure with delivery and the paying for delivery to get to your house, I'm curious on like the margin on that service for them right now, because I'm wondering if it's just going to build up the base right now to attract as many subscribers, and then in 12, 18, 24 months start really raising that price. And Bert, do you have a minimum?
Don't jinx me. Don't jinx me.
Do you have a minimum dollar order?
Yeah, $35. So the way it works is you pick a window, $35, free delivery, and you can add to it throughout the time. So we just scheduled a day in advance, pop in there. We have 2 young kids, 2 adults. So once a week, we're easily hitting $35 in grocery.
Yeah, once a day.
Yeah, we're getting $35 worth of ramen noodles in our household just to hold us over.
Back it up.
Yeah.
Hey, but in all seriousness, I mean, should have done that with with big 18/24 pack of eggs, right?
Yeah, no kidding. I guess I'll put the referral link in there. I'm talking about it so much. I love it. If anybody's looking
to referral system,
trying, yeah, we'll throw it in there because I mean it. It's something that we use. It's nice because you can get more than groceries. You can get households. Okay. This video is not about Walmart Plus. It just happened to go in there and explains why they're attracting people like me, why they're expanding their base, and why they've been able to have such strong sales. Their revenue in the quarter was $180.55 billion, beating expectations. Earnings per share were 66 cents adjusted, beating expectations. Strong fourth quarter, although Amazon is catching Walmart. Walmart continues to dominate. They're the largest grocer out there. That's where they make a lot of their sales in the grocery sector amongst everything else.
Yeah. I mean, e-commerce sales shot up 20% as I'm reading here. Same store sales is up 4.6% in an industry where same store sales might be declining in other companies' financial statements. And as Bert said, those households earning $100,000 or more made up about 75% of the market share gains in the quarter. So again, higher net worth individuals are going into Walmart to maybe save money or to get that subscription and make it more convenient.
But there are some warning signs, and that's why Walmart fell 6.5% during the day. The numbers were great in the fourth quarter, but what really caused some alarm is what's coming ahead, Lanny. Walmart threw in the towel a little bit. They said there's talks of tariffs. They're not immune to tariffs, even though they make 2/3 of their products are either assembled, made, shipped in here that wouldn't be subject to tariffs. They still have 1/3 of their products that may be impacted if tariffs. So their margins are going to come down. They're not going to earn as much. Earnings per share for their guidance was 250 to 260 is that range they're expecting for this fiscal year. That was lower than the 276 that Wall Street estimated from there. So you can see the impact of increased costs coming through to Walmart, and that's going to obviously dent the bottom line, and that sent alarms here. And this is really the first company, Lanny, to announce the impact of tariffs of what's going to be happening. So could this be a bigger sign of things to come for the economy?
Well, let's see if Walmart is a stock to buy right now after a February 20th 6.5% stock price drop here, guys. Ticker symbol is WMT. They are trading at $97.21. Again, we're using the midpoint of the range of the expectation that Walmart set at $2.55. That price to earnings ratio is 38 times earnings.
38. Wow. They dropped 6.5%, and forward earnings are still 38x. That's absolutely wild. I'm pulling it up here on Seeking Alpha. I just want to see what is their 5-year average price to earning ratio trailing 12-month, Lanny, 25.63. So they are well above that trailing 12-month. Now, I mentioned this in the intro. They announced a 13% dividend increase, Lanny. That forward dividend income is going to be 94 cents per share. So that gives you a payout ratio of 36.86%. Walmart's always had a lower payout ratio. They've never had a massive dividend because they need so much of their funds to go back into the business because those margins are so thin.
Right. It's very safe payout ratio. And the 5-year growth rate is now climbing a little bit. Again, it's still at 3.27% 5-year because they were very, very low for quite a few years, except the last 2 years are now bringing the growth rate back. They are a dividend king, doing it for well over 50 plus years.
Even with that dividend increase, their yield is only 0.97%. It's almost back to 1% because that dividend growth has not matched that 150% growth over the last 5 years in the stock price.
Again, up 146%, guys. That is insane over the last 5 years. One of the biggest companies, love what they're doing. Love that they're trying to get subscriptions up on Walmart Plus.
It's awesome.
It's now the only con is that they are fairly priced outside of the market.
Yes. So that's why you have to pay attention to that's why you have to run the screener. You have to ignore the noise a little bit, Lanny, because on paper you would say they dropped 6.5%. Are they a value? Should we be buying Walmart? And that answer is, if you're a value investor, no, they are not a value. If value doesn't factor into your investing decision and you just want a great company, Lanny, that just pumps out revenue, has a growing dividend, that's a dividend king, but you don't care about what the valuation is today, Walmart may be a great fit for you, but that's not a great fit for Lanny and I here on this channel.
Let us know what you guys think, though. After this drop, do you feel like, hey, it's only going to keep going up, beating the S&P 500? Do you want to buy Walmart stock right now? Do you own Walmart stock? And tell us how happy you are as a shareholder.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bertha Hurd and Lanny from the gosh damn Dividend Diplomats. Over and out.